Do you like Europe because it's offering value right now or because it's got no tech?
No, I like it because it's offering value. I mean, it's done very well in the last 12 months, but we think it's got some more carry. Just like the political dynamics have changed in Europe, we think there's going to be growth. Think about the ECB is on a different track than the Fed. It's actually a few months behind. So we think that there's some upside potential. The fact that there's tech in the USA and that's very heavy in the index, Europe does provide some added diversification in that range, but it's also just the base economy. We think it's going to grow.
Chris, let me bring up a chart I usually don't bring up on TV because it's a little messy, but folks, I'll walk through this. This is the acclaimed equity screen on the Bloomberg. Anybody that has a Bloomberg uses this 3 or 4 times a day to see how far they're behind. Chris, you're not. This is the double-digit chart. 12 months trailing, Dow 23%, S&P 17% in U.S. dollars. Oh, the pain, France up 25%, mon Dieu. And then you see the FTSE Italian or whatever it is up 45%. Chris, your people are telling me it's a single-digit world. I don't see it. When do we get back to a single-digit world?
Well, Tom, WEI is actually one of my favorite pages. It's one of the first things I bring up in the morning in my launch pad. So, you know, those are one-year returns. And I think I've been arguing with people that are so adamant about low returns. We're going to see waves in that process. And we're going to have periods of double-digit returns. But then we're also going to probably have a recession here or there. So I think when you look at over a decade, we still think stocks are going to generate an 8% return. But that captures good years like this, like last year and this year, where you get some very solid returns. The key that you pointed out in there is the currency impact. Right. That's been very powerful, and it's actually been hurting people. To have the yen down at what was it, 111, you know, we've just had such a struggle managing our currency exposure.